French carmaker Renault has posted a 1.36 billion euro net loss for the first half of this year from the cost of living crisis, plus also the cost of exiting the Russian market. Let's take a look at the figures as they came through before the bell this morning. That hefty first half loss was mainly as a cost of exiting Russia. The company recorded that net loss in the first half of this year, but it upgraded its full year outlook because of improving profitability elsewhere. Renault is the most exposed of the Western automakers to the Russian market, and it sold that stake back in May for a small symbolic amount. But away from Russia, the company said operating margins in the first half are 4.7% against 2.1% reading in the first half of last year. And it's raised that forecast of full year margins to more than 5% from a forecast of just 3%. So you can see this is all looking very favorable. As a result of that, if we look at the share price chart, you can see quite clearly here that it's risen for a third day in a row. And more significantly today, we are past this area of resistance at around about the 2007.48 level, and indeed well past the 200 period moving average as well. So a very, very strong result. We are currently up 3.68%. We have been up higher than this to levels not seen since the end of February this year. But the company has also warned that the global shortage of semiconductors used in everything from brake sensors to entertainment systems in a car has cut into car production at many major car makers, and indeed Renault's not escaped from that as well. So that continues to be a headwind for the business, but nonetheless looking favorably on the back end of this year. If you're trading this, your stop loss goes under the underside of some of the recent actions around about the 2,500 level with a view to taking this higher. The next line to watch out for is the gains that we've seen, which would take us up to around about the 3,226 level, which are the highs we saw back on the 2nd of March.